Stock Talk with Nico Criticos. Today we're going to be doing some stock analysis on Micron stock. Unfortunately, I do not own this stock. I don't know how this one slipped past me in the last couple months because this stock is up over 200% in the last year, and most of the gains have come from the last 3 to 4 months, really, because the stock was only $100 in August, and now it's almost at 300. So we're going to see what's going on with this stock and is the stock overvalued or is the stock currently a buy? So, if you don't know, Micron pretty much makes the chips. They make memory chips and they're partnered with NVIDIA. They are one of only three players, which we're going to go through that in a little bit. But that's why they are up so much generally because of the AI boom going on right now. So if we look at their numbers here, this stock is now at a $300 billion market cap, only seven times this year's earnings. Trailing 12 months of revenue is at $42 billion. Huge jump up from only 15 billion a couple years ago. Same thing with net income. They were actually losing money in 2024. Now the trailing for 2025, well, their calendar is a little bit off, but trailing 12 months is about $12 billion net income. Same thing with free cash flow, so those numbers are good. Cash to debt is basically equal, so nothing crazy going on there. And then this is just where the numbers get crazy. Last year, $8 at EPS, and now it's supposed to 4x to $32. So right off the bat, I'm thinking, okay, if the stock was about $100 last year, then I would say if their earnings is going to 4x, the stock should generally about 4x, which means this stock could potentially go to $400 and it wouldn't be anything that crazy. But you have to think, where is the earnings going after that? Because if the earnings get cut in half in 2027, well, that's a bit of a problem. So that's where their EPS is actually expected to rise in 2027. So who knows if that's actually going to happen. But I mean, if that's the case, well then, this stock could be $600, $700, $800. It could be like an Nvidia play, but you're going to see here in a minute why that's unlikely and why there's competition, there's prices are projected to come down and all that stuff. So the valuation is very cheap though. That's what's so interesting. So Micron revenue is up 57% to 13 billion. We kind of went through most of that. Their operating margin is now 12% higher to 47%, which is incredible. Management confirmed that its entire HBM, which is high bandwidth memory, for 2026 is already fully allocated under fixed price and volume agreements. Okay, so I mean, they're not the only company to say that with these future contracts and future deals, but I mean, of course, I think that is a good sign if you already have all these sale contracts done for the following year. They are on track to ramp its next generation HBM4 chips in the second half of next year, which is expected to command even higher margins. Okay, well, that's interesting. Micron is now viewed as the closest peer to NVIDIA in terms of revenue and profit upside with the AI hardware stack, right? The recent stocks, blah, 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 fueled by forward-looking guidance, blah, blah, blah. Um, Look how much they beat on these numbers, gross margin, revenue, all that stuff. Then we get to analyst price targets. This company has a $500 price target. That still could be like a double up of where we're at today, which is crazy. But a lot of them are a lot lower. So 350, 325. I mean, if the stock goes to see, I don't know if it's only gonna if you don't think it can go past 350, I don't see why you would buy the stock right now. I wouldn't. I feel like I wouldn't buy it. If you only think it's going to 325 or 330, I don't think I would buy it. Um, while AI demand is soaring, traditional PC and smartphone markets are facing higher memory costs, which could lead to demand destruction or lower unit sales in those segments. Okay. This one, I don't know if I really care about this one that much. Micron has increased its capex for next year to 20 billion. That's the same thing going on with Oracle and some of these other companies that are investing into AI right now. The industry is currently supply constrained. If Samsung or SK Hynix successfully overexpand production in 2026, the current pricing power could soften. That's kind of the thing I was talking about. That's one thing I am kind of concerned with because it looks like, if a company like Samsung makes what if they come out with a better chip or something just as good, and then if they're able to put all the supply into the market, well then that's going to bring prices down. It's going to hurt Micron. So it's stuff like that where I'm not super confident in Will Micron really be able to sustain that? To understand them, we have to see them as one of the three landlords of the world's digital memory. Along with Samsung and SK Hynix, they control the global supply of the storage containers and workspaces. So a very nice moat, okay, very nice moat. They essentially do two things: design and manufacture DRAM, short-term memory for speed, and then NAND is long-term storage for data. So this is the crown jewel. Compute and networking, the high-speed memory for AI data centers and cloud services. See, so they're in a very good position. They're in a good space. There is a little bit of competition, but not a lot. It's still, they're in a growing market. I mean, I think it's the same conversation people are having now with all of these companies related to AI because they're investing heavily in it, and it's just we don't know what the payoff is. So a lot of them with the circular financing plus, the debt they're going to owe, um, it's just we don't know how it's going to pay off and how profitable these data centers and the AI thing is going to be. So that's where it's hard to tell. You really have to. It's kind of like gambling a little bit. Um, they supply the low power memory for smartphones. Apple's a major customer. See, that's another. It's a good sign. I mean, even if things don't go perfect with these investments and the chip prices do come down, well, they still have stuff to fall back on. It's not like a dead business, but with that being said, you look at their numbers, I mean, they were just losing money. If they go back to that, and the stock is, it's going to go back down to being a $50 stock, and you could lose all your money. So that's what I'm kind of afraid of. They produce solid state drivers for enterprise and consumer use. They announced it would exit the consumer facing crucial brand. Okay. For cars, their moat is building a single modern memory fab now costs 15 to 20 billion. Yeah, that's a little bit of a barrier to entry, but not huge. I mean, if somebody wanted to do that, if Apple or Google or whoever wanted to do that, they could do that. Stacking hundreds of layers of memory cells with atomic level precision, blah blah blah, is integrated directly into AI chips like NVIDIA GPUs. Because the memory is packaged with the processor, once a company like NVIDIA qualifies the memory for a chip architecture, they can't switch to another. Okay, so that's great. There is switching costs, and that's what it's good they're partnered with NVIDIA. That's nice. I mean, this is another good thing. I liked when this came out too. The CHIPS Act, they got over $6 billion in grants, so that's good. So I mean, they do have a bit to fall back on, but I still feel like the stock could fall. I don't know. I'd like to buy the stock at like $100 or something. The biggest this is what you need to pay attention to. The biggest threat is commoditization. Unlike software, memory chips are often bought based on price. So if Samsung decides to flood the market with cheap chips, Micron's margins go down, regardless of how good their tech is. See, is that true though? I don't know if that's completely true. The cyclicality is the only reason the stock doesn't trade at a premium. Okay, see, that's interesting. Requires balancing and studying. Okay. The consensus is a strong buy on Wall Street with the average price target around 290, which is what we're at now, basically. But some estimate $500. Its 4P is low. That's true. See, this is a tough one. This is a really tough one. I feel like there's definitely some risk here, but there's also a very nice moat and very nice position and model they have going for them right now. See, when these price targets are that's tough. Insider selling, um, I don't know. This is normally not my type of investing style to buy a stock that goes up 200% in a year and keep trying to chase that. What do we that's what my point was earlier. Are we chasing it to go to 350 or something? Like that one guy has a price target of $500, but is that really realistic? I don't know. It is what we just saw Nvidia do the last 2 to 3 years. I think Micron can do that. So I'm not like it's possible that Micron goes to $500 a share. I just would put it at like a 20% chance. I feel like it's like a 20% chance. So it's probably not my investing. I mean, I am interested in this. I like the company, but I don't know if I want to buy it right now. It's literally at an all-time high after it's up 200%. So I don't know. I don't think I'm going to buy this one yet. Let me know if you guys have different thoughts though, and I will see you in the next video.